Well, we are on to earnings as promised, and the first company on our radar is Transformers and Rectifiers, and the company's actually done very well in the first quarter. It's been a solid start to the year because look at the revenue. Revenue's jumped almost 64%, and the margin's been sublime year on year from a 13% margin last year. Now they're almost touching 17%, which is what the company had guided, that they'll eventually get to that range of 17 to 18%. So let's discuss this performance and more with Mr. Satyen Mamtora, MD at Transformers and Rectifiers. Sir, good morning and thank you so much for joining in.
Good morning.
So the numbers really say it all, right? What a solid start to the year.
Yeah, it's been a very good start.
So I just, for the benefit of our viewers, I just want to reiterate what you've said in the past. I think in the past you've said that this year you could do almost, 3,500 crores in top line.
Yes, that's correct.
And you were talking about 17 to 18% margins. Now that you're almost at 17 already, do you want to increase that guidance?
No,
just tell us more.
I think that is a fair, fair place where we should be in terms of margin. Plus, see what's happened, it is the margins have also increased because our productivity is constantly increasing. We're constantly improving ourselves and developing ourselves in terms of the production. So the margins also have increased in terms of that. So yes, the margins would still remain at 17 to 18%, but 3,500 crores is looking good this year. So we should.
So the margin expansion, I mean, I just want to understand, because you're saying it's sustainable. What will keep the margins here? Is it a change in the mix? Is it a different pricing? Is it different geographies you've entered? Because it's a very big improvement from last year.
So there is no change in the mix. We already have orders worth 5,500 crores in our hand, which the margins are already, we are aware of. The next year, the orders that we are taking, we are also taking at approximately the same margin. Plus, we're constantly improving ourselves. Mukul has joined us as the CEO. Now he's also helping us, develop. So, there is a constant evaluation in terms of the production and how we are doing it. So, we may look at a capacity utilization of 80-85% in the next few years.
As of now, what is the capacity utilization levels? And you have a facility that's coming on stream, I think the Moraiya facility.
Yeah, the Moraiya facility.
That would increase capacity by what, around 40%?
Moraiya facility will be around 22,000 MVA.
On a base of?
37.
So it's going up by more than 50%. Yeah, all right. And what is the current utilization levels of that 37,000?
Current utilization should be around 72%.
72%. And for this additional capacity that's coming on stream, you already have visibility in terms of execution, in terms of tie-ups, that's already in place?
Yeah, all that is in place.
So 80, you said 85% capacity utilization by the end of this year, right?
Yeah, we should be reaching there. We should be reaching there.
Mr. Mamtora, across sectors, when we look at it, transformers and transmission and distribution is one area where most investors we speak to can point to, and there are very few now, where they say, well, there is still strong revenue growth visibility over the next couple of years.
Yeah.
Did you have that? I mean, so in terms of inquiries, orders, not what you already have in the bag, in terms of visibility?
Yep, so we'll be closing at around 8,000 crores order book by FY26, 1st April 26. And there is a visibility. We have approximately 18,000 MVA orders, not orders, but inquiries in pipeline, which will fructify in, over the next couple of quarters. So, yes.
18,000 MVA?
MVA.
Okay, and is there a way to tell, I mean, in terms of market share, etc., what is the, I mean, it's a seller's market, it's a seller's market right now?
It is not exactly seller's market, but it is a market where you can, if you have good quality and if you have good reliability, you can command some respect.
We had the management of KEC, of course, slightly different line of work recently, and they said that lots of orders coming in from the Middle East, for example. He also said that initial inquiries coming in from Ukraine, etc., because the grid needs to be rebuilt in many of these countries. Anything of that sort? Or is very early?
We at TNR have decided that we will restrict ourselves to only 10% of our total turnover in terms of export. We want to restrict ourselves to 10%, not beyond that. And in that, whatever comes, we are exploring those.
Which are the main export markets for you? I don't know if you do anything with the USA. So, there's a FTA, because there's so much changing on trade. I don't know if you want to revisit that.
So Australia is one of our biggest market.
Okay.
Africa is one of our biggest market. Okay. South America is one of our biggest market. Russia, we have been supplying some transformers too. So, and we have some relation with Ukraine in terms of, because we had a technology transfer tie-up with ZTR in Ukraine. So we have some relations there. So that can also develop.
All right. Final question, sir, before you go. Debtor days had reduced. That's what you mentioned in the past. In the working capital days, we're looking at bringing it down. What is it at? And I think the target was 100, 110, 120 days?
Yeah, the target is still remains at 120 days, 110 days.
Okay.
And we are at currently 135, 137 days.
All right, great. Thanks a lot for coming down and detailing those numbers. It appears the last quarter's numbers were good and your visibility for the remaining of this fiscal as well is quite solid. We look forward to that and we'll track you on all these numbers. Thanks a lot for coming down. Time to slip.
Just a quick one on that point about, actually it's true, right? I mean, count the number of sectors, not companies, and there are outliers everywhere. But 15-20% steady revenue growth. Transmission distribution, hospitals maybe?
Yes, for sure.
Right?
Yeah.
15-20%. And I think AMCs, because SIP flows are very, very solid, even if the market goes for a dip. I mean, that money is sticky.
Yeah.
Apart from that, maybe BF banks, some NBFCs, but then you got one or two everywhere. But as sectors, if you think about it, I mean, actually you'd struggle. I mean,
double-digit growth, not too many.
Just make one point on the capital marketplace. Last week for BSE expiry and NSE expiry, the volumes were almost the highest we've seen in multiple expiries. So the volumes in the futures and options space suddenly came back.
And that's raised the doubt whether Jane is back.
Jane
but Jane is not
back or
back. Jane is
Without Jane.
Without Jane.
All right. Well.